the head of macro strategy, APAC at Wells Fargo, joining us. Chidu, hi, morning. Thanks so much for your time today. Talk to us about this simultaneous rally on Friday that we've seen in the US equities as well as silver and gold. They're also trying to find some momentum back after that sharp beating that they've taken. First, let's talk about the US equity, the kind of run up that we've seen. Talk to us about what has led to that, because you've got a mixed tech show, at least in terms of earnings coming in from the US, and how sustainable are these kind of moves that we've seen in this 50,000 figure coming in for one of their major indexes. Talk to us about how sustainable is that on the Dow Jones?
Good morning, and thanks for having me today. We've been quite optimistic on the semiconductor space in the US. In fact, the overall equity space in the US, we think that this recent sell-off in semiconductors was a little overdone. There's some concerns about the amount of capex that is being projected by a lot of the corporates, particularly the tech corporates, semiconductor corporates. And that has led to some concern on cash flow requirements, especially near term. But looking at the broader picture, looking at it a bit more medium term, all of this capex is one, likely to go into the semiconductor industry, and two, likely to lead to medium to long term cash flow gains. So we think that the sell-off in semiconductors was a little overdone. We still remain optimistic on US semiconductors, global semiconductors, and remain quite optimistic on the S&P as well. We, I think, are among the more optimistic on the S&P across the street, and I think there's a lot more gains to be had this year.
Chidu, hi, great having you. When you're looking at the larger concern where markets go, where equity markets go, it's with regard to AI. Now, contextualize this for us and how you look at it. Tech stocks, software stocks are under some bit of pressure as a result of everything happening AI. But you also got a US expectation that growth will be maybe 4% or even higher than 4%. Talk to us about the likelihood of that in your opinion, and what the effect of that could well be on the global and the APAC marketplace. What's your sense?
It's a great question. And I think there are two aspects to that question. One is what is happening with the US corporate space, particularly the semiconductor, the tech firm space, and two, the US macro space. Looking at just the earnings that we've had over the last fortnight or so, the earnings have been very positive on average. In fact, they've been beating most expectations. Medium-term earnings outlook is also quite strong. There is certainly some concern about the capex spend, but like we just discussed, capex spend is positive in the medium term. It's a near-term cash flow drain, but medium term it is positive. The other aspect is on the macro outlook, and growth in the US has remained very, very well supported. Near-term data has been soft, a little mixed, but nothing untoward, nothing too worrying. In fact, it shows the strength of the labor market in the US, where there is still some job creation. It isn't dramatically strong, but it isn't an economy that is calling for substantial rate cuts from the central bank, and the central bank is keen on cutting rates if required. The important part of the statement being if required. And at this point in time, it doesn't look like there is too much further monetary stimulus required in the US. Consumption growth is still quite strong. Labor market creation is still quite strong. Wage growth is still reasonably robust, and that should keep the US economy quite well supported in near term.
Chidu, hi, morning, Sajid here. Do you see rotation of sectors at this point in time, given the fact that last year it was primarily led by AI and semiconductor stocks? Traders or investors are now trying to diversify their risk by rotating into some of the sectors which have corrected by 10 to 15%.
See, that's certainly one aspect and one reason for the sell-off in semiconductors, particularly that we saw over the last fortnight. The Russell, which is the domestic industrial sector, has been a little underinvested. You look at the S&P composition and look at an S&P equal weighted index over the last year that has substantially lagged the overall S&P index, which means that the semiconductor, the tech sector has been leading the gains over the last couple of years. So there has been a bit of a catch-up rally, especially as the domestic economy, as we just discussed, is in still good shape, which means that industrial complex will do quite well, consumer goods will do quite well, and that is driving the recent rotation. But we think that semiconductors as well will have to regain some of the near-term losses that they've had and remain quite optimistic through to the end of the year.
And do you see money flowing back into emerging markets, into non AI sectors in the emerging markets or tech services in the emerging markets?
Right, there are two aspects again to this. One, when global sentiment is generally strong, emerging markets tend to benefit from that, from increased portfolio flows, particularly on the tech sector. So we should be seeing markets like Taiwan and Korea benefit from increased equity flows. We've started seeing that in Taiwan already, and we remain relatively a little bit more bullish the Taiwan dollar versus Korean won because of its higher exposure towards AI related stocks. The second aspect is markets which have been underinvested, like India over the last 12 to 18 months, especially given pessimistic sentiment on the trade tariffs and external headwinds. Now that some of that is removed and domestic growth is picking up, credit growth is picking up, that should also lead to increased portfolio flows into markets like India, and which should also again support the FX story here in India as well. So think little bit more bullish on Taiwan dollar over Korean won, and probably the worst is over for the INR near term.
Okay, great to have you this morning, Chidu. Thanks so much for joining us and weighing in with your thoughts on everything that's been happening geopolitically. Thanks so much.